Welcome to TradeTheMBI.com. This is John. This report is for the 31st and we end the month. Well, look at this. We talked about it before. The positive extremes right down here at the bottom in red meant that the full breakout move right here had to be retraced, which was going to take us all the way back to 74. And we just popped down below that, basically hit the green ABM and are supporting right off that setup. It was a pretty dramatic move, the spike going up there. A lot of people are, overdoing it, but when you get these breakouts from highs, they typically tend to retrace themselves right back, and that's when you look for your next buy configurations. In this particular case, you're already seeing a dramatic rollover of the DOC red right now, which is just a pause. And again, we talked about this as far as the current state of legislative affairs and, the expectation for some that things might not be as fast as they had hoped. And you can see for the NASDAQ, a little bit more volume of retrace got to that bar. We had a positive extreme also from this lower one, which could produce a little bit more weakness going into it. This isn't really going to be anything hyper dramatic. It's going to determine whether or not, though, some of the financial members that are inside the new cabinet and that, or in the legislative connections are, constantly going to have their ear to the ground to see where things are going. And that's where we're going to see the earliest signs of a deal being formed. I think at this particular point, it's somewhat fluid, and you might expect that with some of the negotiations, but I think the market has enough inside players that there really isn't anything dramatic. This is pretty well contained and very normal from a breakout standpoint. So playing this game of over 20K and that on the Dow, and that it's a nice round number, really not relevant to anything in particular with the readings that we're seeing from a Euro standpoint. Right in the right zone. No complaints with that one. TLT bonds, now some people are still touting them. And with the weakness in the economy, you could make the case that the Fed's going to be crippled again. They probably didn't need to raise the rates the last time when they did it, because there really wasn't any evidence that suggested that it was a good idea, but they went ahead and did it anyway. And at some point, they do have to normalize, so if they can creep them up without impacting things too dramatically, but you can already see that slowing of the economy afterwards, not necessarily a great thing. However, the optimism, problem with it is it's going to take some time. And this is the reality of current events versus the future the market's projecting. And gold off that retrace, support right along those ABMs, taking a nice bounce off of it. Not a surprise. So intraday, and the beautiful short signal that started off from the weekend, gap down lower, and then that was a beautiful trade. Now here's the adjustment of what the shakeout looks like under that configuration. It converted. Now, when you see the white on there flipping back, until I finish some of the adjusted algorithm situations within the DOC down here, as far as the orange reset, with the steel coming back underneath, along with the rising shakeout, and that it would probably is going to be turning into a green color going forward. But for now, the red's pretty clear. We ended up with softness, and then boom, we had a nice reset, and that's when the breakout took over. And then actually the magenta candle came in right around 76. That was earlier than the even the shakeout could grab it. And that's just going to come back, refill the positive extremes, which it's now done. If we slide right over here, you can see the positive extreme began at 2271. It's exactly where price is right now. Retraced a little bit of carry through on excess stops, and boom. Hasn't converted into a buy, but you can see that orange coming from the peak up there on a straight downward tend to do it. And you've got a complete reset of the DOC right here. I would expect that we're probably still going to play within some of those ranges, but if they can capture some more shorts building into a position, then they're going to squeeze nice and tight. And that's a typical thing, because this was an opportunity for a lot of people to jump into a lot of bearish bets. And you can see that with the cyan on the daily skyrocketing right up there above the zero level on that. So reset right here, they're going to need to really break down, try and come after the 2205 level. Could be a little bit more difficult to get to that at this particular point. But any little negative thing as far as delays on tax or review or even the stimulus certainly could propel that very quickly. It's just not going to take much from that stand because a lot of this has been pre-priced, and if that's the case, then there's still plenty of room, and that still wouldn't be a significant correction in any way, shape, or form. So the new norms. Anyway, the indicators for February will be going out today, probably all set before market, so check your emails. As always, though, trade well, and we'll talk again later.